So the markets are encouraged as China and the US prepare to hold their first confirmed trade talks since Trump unleashed his global tariff war. Our guest says investors do need to diversify beyond stocks and look into bonds, currencies and commodities. Let's get more from David Aspell, Co-Chief Investment Officer at Mount Lucas Management. Thanks very much indeed for joining us. Before we get into your idea about diversification, what do you think? Is there really a prospect of America and China reaching a deal anytime soon? I know that the US administration has admitted that current tariffs are far too high.
Yeah, it seems like you're right. I mean, it seems like the current level of tariffs, both sides think they're far too high. It seems like we're going to get to a lower number, I assume. Hopefully, that they start the process this weekend. The issue is that trade deals take a really long time, and they're not something you can just do very quickly. But having said that, as the president said yesterday, it's really him that decides. And, if he is more than within his power to be able to reduce the tariffs to a lower level at any time. And then I think they can work through it from there. The issue, I think, for the stock market is that type of approach and that view is already pretty well in the stock market, I think, at this point, that the markets are already pricing that you're going to get a reduction to 30, 40, 50%, and some of the heat's going to come out.
We hear a lot about trend following these days, algorithms that like to jump aboard what they work out is a direction for the market, can be self-reinforcing. But you say that kind of strategy is tricky these days because we got these headline-driven moves in the market? Yeah, I mean,
when you get headline-driven markets, where you've got one person that's dictating what can be quite large moves, sometimes you can get some fairly quick reversals. I think over time, those things settle down and play out into a new set of trends that models can pick up. I mean, there's trends in commodity markets, there's trends in currency markets. What we've got is an administration with very large macro goals. They view volatility as a feature rather than a bug. And what they're trying to do is reshape global trade. And that all of those goals run directly through currency markets and fixed income markets and commodity markets. So I think that it will end up being a good environment once we get through this reset period.
It's always sensible, I guess, to own a wide variety of assets. And you think people should have at least reasonable holdings in bonds and commodities, for example?
I think so. I mean, on the commodity side in particular, you've just got to look at the gold market to see that there's large shifts going on, and these are directly related to what's going on with the trade war. You can see it in gold has been going up in a pretty much a straight line. It's a couple of volatile periods here and there, but at least yesterday we were at all-time highs. We're not far off them today. And what that's doing is picking up some of the uncertainty that's in the global marketplace. It used to be that countries would store lots of their reserves or lots of their the proceeds from the surplus they're running in dollars. And if you've got countries that are somewhat afraid of doing that, or want to diversify away because the US administration is somewhat less friendly, then gold is a natural recipient of that. Trend following is one of the better ways to pick up that move. We've been long it for the past couple of years. It's been a great trade on the trend following side, and currencies are similar. You can see big moves in things like the euro and the yen and the dollar more broadly as these the trade skirmishes play out.
Yeah, sure enough. I'm showing, it depends what gold metric you're looking at, but certainly gold was in record territory yesterday, down today, apparently, on people feeling more comfortable about the trade war. What are your thoughts on gold? I mean, when we see gold go to record highs, is that a worrying sign for the world's political and economic stability that people would resort to an asset like this that pays no interest?
I think it depends. It depends on where you sit. I think that what's happened is over the past few years, partly from the Russia-Ukraine war, the US has has broadened the use of sanctions and weaponized chunks of the dollar to affect its foreign policy. They're doing the same thing now with the economic policy. If you're a country that is not on particularly friendly terms with the US, do you want to have a lot of your reserves within reach of the US sanctions? Probably not. And there's not that many other markets that that count as a store of value, that are generally accepted, that you can store money in, and you can avoid the reach of the US US sanctions, I think gold is one of those places. It's also a natural place where people go in times of uncertainty. So I think the drivers for it are fairly remain in place. I mean, I think there's a case that if you get a large-scale reduction in fears and over the trade war, and everyone plays nice again, then some of that fear comes out. That'd be a natural thing to happen. But at least for now, I think it's quite a logical reaction.
It's interesting. Trump, of course, maybe this got lost in the shuffle. He insisted yesterday he's going to prescribe the tariff levels and moving away from the idea that he's interested in back and forth concessions. But of course, he'll be saying something different perhaps tomorrow. People have wondered if Bitcoin and crypto will turn out to replace gold. Is crypto an asset that interests you?
We don't trade it. We've been asked about it a few times. It's an interesting asset. I think the idea that it can be a digital version of gold is reasonable. I think partly people in developed countries don't really see some of the features of it in quite the same way. That if you're sitting in a country that has quite a repressive government, or if you're in a country that's had continued devaluations and you can't get access to your money, or you're worried about that, or you can't get it out of the country, then I can see the logic for storing it in that fashion in a much more clearer way. Is it a digital gold? Like maybe, but I think it will take a long while for broader adoption across the investor spectrum to really invest in it.
David, thank you very much indeed. David Aspell is Co-Chief Investment Officer at Mount Lucas Management.